Welcome to the latest edition of Citrus Bites, live from our offices in Sevenoaks. So it felt like a really good day to be coming to you with a Citrus Bites update, because not only have we got an inflation update for the UK, but also Rachel Reeves presented her spring statement to the House today. So a little bit of coverage on that. Let's start with the inflation story first of all. The good news is it's not going up as quickly as before, and it's not going up by as much as was actually forecast. So CPI inflation came in at 2.8% on a 12-month rolling to the end of February. That was against forecast of 2.9, so we'll take any small wins, and actually down from the 3% that was running to the 12 months to the end of January. Now, actually, that may have been very timely good news for the Chancellor. And I'm going to come on to why in a moment. But actually, inflation stories been receiving an awful lot of noise, particularly with the link to interest rates. So just kind of a reminder, just having a quick look at this slide, just to remind everyone. So there you can see our blue line, CPI at 2.8%. Now, for those wondering, there's a bit of a story for you. For those wondering, well, what's influenced CPI figure to be slowing down in terms of its uplift? Strangely, it seems to be clothing. So clothing has actually declined for the first time since October 21, but not for all items of clothing. Here is your news story for today. It's led by garments for women and children's clothing. So it's those two categories that have seen a particular decline, as I say, for the first time since October 21. And the reason that inflation story remains important is, you can see from the blue line, what happened significantly during 2021 and 2022 as that blue inflation line really ramped up. So the red line of the Bank of England base rate obviously started to really escalate. So anytime that blue line is going up by a lot more than the 2% goal that the Bank of England has, we have the risk of the red line also going up. And what people are really keen to see, and particularly the Chancellor, for the reason I'll come on to, is to see if there's any way that red line can continue going down. So at the moment, Bank of England, most recently, Andrew Bailey, the Governor of the Bank of England, held rates at 4.5%. And, lots of people would be really keen to see whether that could actually start to drop further than the 4.5%. Rachel Reeves came to the House today, sort of big backdrop as to why is the spring statement getting noise? Because actually what hasn't changed is the commitment that there will only be just one financial event, or budget as we know it, per year. And in theory, that was honoured because there were no further tax raises or relief changes. So that's why, in theory, it wasn't a budget, it was only a spring statement. And the reason the statement started getting a lot of noise, perhaps over the last few weeks, is as follows. Number one, there's been such a noise about the increase in defence spending being required. Clearly, the world is changing rapidly. And I think kind of most of us will be aware of that story to go why it's important to have that increase going through in defence spending. The second thing is higher for longer interest rates. So I'm just going to put up a slide here, which is public sector net debt. So imagine, let's think of the family household. And the family household borrows money, and at some point that money has to be paid back. But obviously, as you borrow money, you're very mindful of interest rates, because interest rates have a really big influence on the interest payment that you're going to have to make on that debt. The challenge facing the government is like this, which is, as you can see from the blue line here, it's just continually going up. So the UK is heading towards a £3 trillion debt. Convert that into your family finances. The one thing you'd really want to make sure of, if the interest payment that you've got to make on that debt keeps going up, is you'd want to make sure that what's coming in is continuing to rise. So what's coming in outstrips the payment you have to make. If what's coming in starts to kind of wobble or risk going down, then obviously all of the commitments that you're making to where you're going to spend your money have to come under review. And that's pretty much where Rachel Reeves has found herself, given sort of, I guess, what is an emergency to really create that increase in defence spending very quickly. So the other commitment that the Chancellor had given is around making sure that by 2029, that the percentage of the debt against the GDP, so this is the value of everything being produced in the UK, is falling. So really important that the growth story remains positive, because if the growth story falters, then obviously that gives the Chancellor less money to spend on a backdrop of higher interest rates and that payment of the debt being higher. And actually what happens is that spiral. So strangely, the government then finds it more expensive to borrow money. They need more money because they're not able to service the interest payment and all of the other expenses that the government has to make, and investment the government has to make. So typically they become a worse risk, for one way of putting it, just as we would do as a kind of mortgage borrower, if you like, trying to buy a home and having a mortgage. And therefore the rate people want to charge them to lend the money goes up. And that just creates an even bigger problem. Hence, Rachel Reeves coming today and going, right, I stand by the commitment that I made originally in terms of the 29-30 commitment for public sector debt is falling as a share of GDP. We do need to spend this extra money in defence. We have got to accept the fact that interest rates are higher for longer at the moment. And also they were given the backdrop against the OBR, so the Office of Budget Responsibility. They made a comment that said, having looked at what was going on in the UK, they slashed the growth forecast for 2025 in half. So not marginally, not this might be a little worse than expected, absolutely in half. Now, how accurate are they? Don't know. Might be worth kind of an interesting piece of work at some stage to look at their forecast, but nonetheless, that created quite a stir. So Chancellor came to, kind of came to the House today to say, this is what we're going to do about it. What did she announce? Well, she obviously announced that, as was expected, the increase in the defence spending, quite significant increase in defence spending. And then it starts to become, well, what can be cut? Where can money be saved? And I think most of this had already come out recently. So it was news around overseas aid budgets have been cut significantly, and also the welfare budget. And I'm not going to go into those today, but clearly a lot of press around where that welfare budget is being saved, the way certain benefits are being slashed. And obviously you'll see a lot of news, no doubt, over what that means for certain individuals. But the Chancellor has made it really clear today she stands by the decisions that were made last year. I think against the backdrop, clearly we're seeing a lot of negativity. Businesses actually, starting to struggle under what's coming in next month around national insurance contributions. We've already seen a lot of retailers, a lot of major retailers and businesses actually cutting back, and the impact on small businesses, which has been widely publicised. If that happens, of course, unemployment starts to creep up, less jobs available. What happens if unemployment creeps up? GDP could be hit. Less inflow into the government coffers to be able to make this investment. So you look at this and go, wow, what a great job being the Chancellor is. In some ways, I just view it as it's exactly the same as running a household. And you're just trying to balance all of these different levers to go, how can I make sure I've got, as things move and as I need to reprioritize my spending for whatever reason in a certain direction, where can I save money from? But actually, how can I make sure I continue to invest in things that might just generate me more money? And in a nutshell, that's what Rachel Reeves came to the House to present today. Will it work? Well, the OBR have now looked at this and gone, although they've slashed the forecast for growth for the UK for this year in half, actually after 2026, where it's pretty borderline in terms of where we were, the original forecast, and where the OBR are now, it then goes up through 2027, 2028, and 2029. It increases above their original OBR forecast. So the OBR are saying, do you know what? They think what was done today and investing, there's been quite a lot of investment story made around infrastructure, around property, housing, and the number of jobs that will be created in order to fuel that housing that's going to be built. They're saying actually that's going to make a positive contribution to GDP. And at the end of all this, what's it done? Well, government gilt. So this is as I was saying before, the amount it costs government to raise money because they need to borrow still. That's eased off today compared to where it's been over the last couple of weeks. So then an initial indication for the government that the city, if you like, is viewing this as they can understand the story. They do believe the story. Obviously, there is a long way to go now to make sure that the story plays out as has been predicted by the Chancellor. But the initial kind of reaction from the city seems to be from a government borrowing perspective, the costs have been controlled. So that's really it. So I've given you a real whistle-stop tour as to why the spring statement perhaps received some more noise as it might have done, the difference between the spring statement and the budget, what's actually happening to public sector debt and that 3 trillion figure. on why high inflation or sticky inflation and therefore high interest rates are indeed as much or a bigger headache for the government with all of this debt to service as it is for somebody running a household, trying to obviously maintain all of the spending that goes on and borrowing within a household as well. So that's it for today. Hope you found it useful. Thanks ever so much for watching and look forward to seeing you again soon. Take care and bye for now.